and welcome to our weekly look ahead at the markets. And over the last few days we've seen a real break in the consensus in terms of the macro. You're seeing yields pushing up again. That's off back mainly of some decent data in the US, but across the whole sort of bond complex we're seeing certainly the shorter end of the curve nursing 15-year highs on those yields. So the highest I think for the 2-year in the US since 2007. In Europe, the UK, it's about the highest since 2008, and you're seeing this sort of break in the 2-year and the 5-year yield, real yields pushing up, and so that signals potentially a bit of a gear change, a gear shift in the market consensus about where things are going. We had strong numbers out of the US in the last week, but as I say, it's across the piece. And so in the coming days, what we're going to be looking at is some inflation data. Firstly, out of China, that's at the start of the week. PPI and CPI numbers coming out of China. We did see that PPI in China kind of fall 4.6% in the previous month. So disinflationary trend in the PPI numbers are coming out of China. Similarly, the US CPI numbers that we're looking at later in the week, they did fall, the headline number did fall, but core inflation remains stubborn. The core number last time was 5.3%, and that's holding pretty firm. Elsewhere, we have Reserve Bank of New Zealand. That is potentially going to pause rates. It hiked last time out, but it didn't change the forecast for the OCR, the official cash rate. So we think potentially that means it thinks it can pause. Bank of Canada, meanwhile, that might hike for a second straight month. Remember, it was on pause for a lot of the year and then chose to hike again last month because of inflation trends. So that potentially going to hike again. So across the piece, we're looking at the bond market, what that's doing for global stock markets. Last week, the FTSE was nursing a 3-month low, close to that March low, which is the year to date, around 7,200. We've also seen the Nasdaq come off in the last couple of sessions as well. Looking ahead at the yen, that's one of the key risk factors that we've got on our tape. It's just nudged off that 145 level. I think it's a big risk for the market. I think deleveraging in FX is probably underrated as a risk, and I think some of these carry trades that you've been seeing, if they start to unwind and you see a reversal into the second half of the year with the yen rallying, and we had that strong wage print from Japan on Friday, so that's an important thing that the Bank of Japan looks at. If you do see the Bank of Japan start to normalise, you could see some pretty aggressive moves across bonds and across FX. So keep your eyes on that Japanese data. That's going to be the key thing to look out for over the next few weeks and months. But this week coming up, as I say, US and Chinese CPI, PPI numbers, as well as Bank of Canada and Reserve Bank of New Zealand. Also, we've got some data from the UK, unemployment numbers and wage numbers. That's going to be something that the Bank of England will be looking at, which is now expected to raise rates by another 50 basis points when it next meets. So that's it for your week ahead. Thanks for watching.